Coming up on Market to Market, NAFTA's replacement rides in on a wave of upbeat reviews. Producers and politicians sort out the details for the new trade deal. Harvest slows as farmers fight rain, floods, and hurricanes. And market analysis with John Roach next.
To realize that the economic growth that's occurring.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, October 5 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. A few more people went to work in town last month. The income will help soften the blow of higher tariff-induced prices for cell phones and cars. The unemployment rate fell to 3.7% in September, its lowest level in nearly 5 decades. The number of jobs created was a modest 134,000. The Mid-America Economic Index fell slightly but managed to maintain its 22-month streak above growth neutral. Despite 6-month-old tariffs, the trade gap widened in China's favor to hit a total of $261 billion. The trade war with China remains on the minds of rural Americans, along with other big issues like a bountiful harvest and low commodity prices. Chinese officials have been staying away from the negotiating table, but that hasn't stopped U.S. trade officials from making other deals. John Torpy kicks off our coverage with details on NAFTA's replacement.
After sparring for more than a year, trade negotiators came together earlier this week to announce the creation of the United States-Mexico-Canada Agreement, or USMCA. The fight was triggered when President Trump announced the U.S. would be dropping out of the quarter-century-old North American Free Trade Agreement in 2017. Almost 2 months ago, the U.S. reached an agreement with Mexico, which pressured Canada into returning to the negotiating table. A failure to reach a deal by last weekend would have resulted in a bilateral trade agreement between the U.S. and Mexico. The move would have left Canada to endure steep tariffs on their automotive industry, threatening up to 60,000 jobs. The new deal contains big wins for agriculture producers. U.S. dairy farmers will now have access to a 3.6% share of Canada's tightly controlled dairy market. The level is higher than the one negotiated in the Trans-Pacific Partnership, a deal also abandoned by President Trump. Canadian negotiators have further agreed to scrap a controversial pricing structure which U.S. dairy producers claim artificially deflated prices for some of their products. Cheesemakers were soured by the new agreement. Mexico had leveled retaliatory tariffs on U.S. cheese after President Trump installed duties on steel and aluminum imported from several nations, including the nation's number 3 trading partner. Cheese producers were hoping the tariffs would be repealed in the new agreement. However, those duties remain in place. Officials with automotive producers in both Canada and the U.S. were pleased with the deal. Several new rules will help reduce tariffs in cross-border vehicle production. In the trilateral deal is a requirement that up to 45% of all cars manufactured in the 3 countries be assembled by people earning at least $16 an hour. Also included is a provision mandating that 75% of a vehicle be manufactured within U.S., Canada, or Mexico to qualify for duty-free status. The earlier agreement was set at 62.5%. Both rules were a move by negotiators to create more manufacturing jobs and boost wages. The agreement also makes it difficult for China to work its goods into the U.S. through Canadian or Mexican ports. The United States was given the power to oust either of the trading partners if they enter into a deal with China. Other nuances in the trilateral deal include a 16-year sunset clause and a review of the pact every 6 years. The USMCA still has a way to go before it becomes reality. The leaders of all three countries must sign the deal, and the U.S. Congress needs time to sign off on it, which is unlikely to happen before 2019. From Market to Market, I'm John Torpy.
This deal is only done in principle. The member nations spent the week singing from the same page of the USMCA songbook. Peter Tubbs has more.
Is a brand new deal. The agreement will govern nearly $1.2 trillion in trade, which makes it the biggest trade deal in the United States history.
Negotiations with Canada carried the talks into Sunday night, when both countries gave ground on issues that had slowed talks.
But what I can say is that free and fair trade in North America, a trading zone that accounts for more than a quarter of the world's economy, with just 7% of its population, is in a much more stable place than it was yesterday.
Access to the Canadian dairy market had been a red line during talks, but negotiators traded increased export volumes from the Canadian auto industry for more American exports of dairy products.
Dairy was a deal breaker, and now for our farmers, it's, as you know, substantially opened up, much more. And I know they can't open it completely. They have farmers also. You know, they can't be overrun.
The American Farm Bureau Federation applauded the new deal. Trade is critical to agriculture, especially trade with our two closest neighbors. The USMCA builds on the success our farmers and ranchers have seen from NAFTA. The elimination of Canada's Class 7 dairy pricing program is a clear victory for our farmers. The American dairy industry sees the potential for millions of dollars of sales to both Canadian and Mexican consumers.
So I think the certainty that this agreement brings provides, I think, some stability and some reassurance to the market, which hopefully over time will strengthen and stabilize the market. It certainly provides us with the assurance that our number one market for dairy, Mexico, will be preserved.
It's going to help wheat. They don't take very little American wheat. They take very little of our dairy products, poultry and eggs. And for those segments of American agriculture, it's an ideal agreement. And one that I never thought that they would get, particularly in regard to dairy. That opens up more markets for our dairy product.
The scale of the American economy and its importance as a destination for Canada's agriculture and manufacturing output kept the country at the negotiating table. But the northern neighbor views the accord as both an opportunity and source of protection.
It also needed to be fair, which meant that it would have to preserve the fundamental principle of the original agreement, which is that when your trading partner is 10 times your size, you need rules. You need a level playing field.
Mexico also applauded the agreement.
Among other benefits, the new agreement promotes new, more responsible regional commerce in the area of labor and the environment. It helps create more jobs and better salaries to the benefit of workers of the three countries.
From Market to Market, I'm Peter Tubbs.
Hurricanes and political action have been adding pressure to crude oil prices for a year. Farmers have felt the effects as prices for on-farm diesel moved 17% higher over the same time period. Weather is always on the mind of those living and working in farm country. This week, hurricanes and flood warnings have garnered headlines. Paul Yeager reports.
The arid Southwest experienced a sea change this week as remnants of Hurricane Rosa swamped Phoenix streets. Flash flooding roared through other locations of Arizona, California, Nevada, and Utah, leading to closed schools. The region has been locked in drought for much of 2018. The latest drought monitor from the University of Nebraska reveals slight improvement nationally in areas with parched conditions. Currently, 52.65% of the U.S. is out of drought, the highest mark since June. Water levels at New Mexico's Elephant Butte Reservoir have been low for years. The captured body of water supplies the region through prior appropriation water rights and sits on the Rio Grande River. any rainfall will help ease tension in following years. A large swath of rain is predicted in the next week, stretching from Amarillo, Texas, across the Corn Belt and into Canada. Another 6 to 8 inches of rain could fall in an already drenched area that is in the middle of harvest. The weekly look at rainfall from Intellicast also reveals an already wet Corn Belt stretching to Wisconsin and Michigan. This 7-day precipitation forecast map from DTN drew a lot of attention on social media as farmers waited for fields to dry again from a wet September that has lingered into October. 15 cities set marks for rainfall. Records in Texas, Iowa, and places farther east that fell victim to Hurricane Florence's rainfall will be noted in many history books. When combines eventually did roll, it was usually for a limited time engagement. Despite the delays, USDA data reveals corn and soybean harvest is ahead of the 5-year average pace. For now. For Market to Market, I'm Paul Yeager.
Next, the Market to Market report.
Strong export sales, trade news, and poor weather made for several volatile sessions in the commodity markets. For the week, December wheat gained 12 cents and the nearby corn contract added 12 cents. Soybean export sales and news of the USMCA helped push the November soybean contract 24 cents higher, despite unresolved issues with China. The December soybean meal contract added $10.60 per ton. December cotton shrank 27 cents per hundredweight. Over in the dairy parlor, November Class 3 milk futures fell a quarter. The livestock market finished mixed as the December cattle contract shed 70 cents, November feeders added 18 cents, and the December lean hog contract moved 38 cents lower. In the currency markets, the U.S. dollar index bumped up 56 ticks. Crude oil prices hit a 4-year high early in the week, but fell back on news of a Russian-Saudi deal to add $109 per barrel. COMEX gold added $9.40 per ounce, and the Goldman Sachs Commodity Index gained 8 points to settle at $494.20. Joining us now to offer insight on these and other trends is our senior market analyst, John Roach. John, welcome back.
Thanks, Delaney. Nice to be here.
John, we had another busy week this week. I want to start out here with Russia wheat exports. They mentioned this week that they're going to be halting loadings in Russia. Was this a political move, or do you think Russia really needs to stop exports because of phytosanitary concerns?
Well, I think they have a problem with production level. This last summer was a very dry summer in Russia, and so yields were smaller than what they had anticipated. And now they're in the planting process, and it continues to be very dry in about half of Russia, the southern half of Russia. And so the concern is that their supplies are going to be further limited, and they don't want to get themselves into a domestic high price situation. So they're talking the market to slow down a little bit. But what's happening is actually the opposite. The Russian exporters fear that they're going to be limited, and so they're shipping about as fast as they can ship right now. And they actually are ahead of the pace what they would normally be here at this time. So it's kind of a funny thing where there may be limitations, but meanwhile, they're actually hurrying to get some of the shipments gone.
Interesting. So, John, tell me, what is that doing then for the U.S. wheat market if Russia is speeding up exports? Well,
it's actually, when we get the news that they may run a little bit short or may restrict them, the wheat market rallies very quickly, and then we get news that they just sold a bunch more wheat, and the market goes back down again. So we've been just kind of going back and forth, trying to work our way through these big sales that are coming right now.
If Russia does get to a point where they have to curb exports, how much of a rally do you anticipate us to see in the wheat markets?
Well, you never know. I mean, but we could go back somewhere close to summertime highs, perhaps. The wheat market this upcoming year is one of the first years in quite a while that we've had the ending stocks actually being pulled down. So we're actually tightening supplies. And so there's opportunity here for this market to rally if we start to worry about the new crop wheat production for next year. Now, on a similar discussion, the U.S. wheat now is getting some rain, and so we're taking away maybe, unless it gets to be way too excessive, but rain is usually good for wheat at this time of year, and so it would seem to me that that might take away a little bit of worry too. So we're going to watch wheat crops around the world to see what the weather situation is doing.
Let's talk about the weather situation. When we look at the corn market, a lot of producers have been delayed. Have we priced in this wet weather into the corn markets at this point?
Well, we all looked at the map that had the big
Yes.
black stripe on it that looks like we're going to be inundated. And so yeah, we've priced it in, I think, but we haven't yet seen how long it's going to keep us out of the field and see whether we actually have losses because of it. The likelihood is that, that this will slow down our harvest a little bit. And one of the things about a big crop is if it's all trying to move out of the field and into the pipeline at the same time, it puts a lot of pressure on. If you meter it out a little bit because you're having weather slowdowns, it takes a little of the selling pressure away from the market. It gives the market a little more time to absorb it.
And you mentioned there that it might impact yield. We've got a big report coming out next week with the WASDE report. Do you anticipate the USDA to adjust yields at this point due to weather?
So far, everybody else has. FC Stone came out and raised their corn and bean numbers. Informa came out and raised their corn and bean estimates. So yes. And then the farmers, as we talk to them, we're still finding lots more farmers surprised with how good crops are than we are finding surprised how being disappointed.
The other thing, John, I wanted to ask you about the WASDE report in regards to corn is new crop corn came in higher. How will that translate into the crop carryover?
Well, we may well increase the carryover number, but so far our corn exports are running a little ahead of schedule, and so maybe the government exports are a little bit low, and so maybe they have to raise them a little, and it might be enough to absorb a bigger corn crop. We may actually add a little bit to the ending stocks, but I don't think that really makes much difference to the market. We're trading right now based on what it takes to do business rather than what's the long-term outlook. The long-term outlook, if you look at corn, you'd talk a lot higher prices, and on beans you'd talk lower prices. But we are at the price levels it takes in order to do business.
John, the other thing I wanted to make sure we talked about here is ethanol. We've got President Trump coming to Council Bluffs early next week. If he does announce a deal or a announcement about E15 being able to be sold year-round, how much support does that add to the domestic corn market?
Well, it just keeps adding. I'm not sure exactly how much, but I mean, we're going to start talking about boosting the total demand on ethanol, and we're going to consume more corn doing it. But we're also developing some means for cellulosic ethanol that we've been hearing about lately too. So we may be able to source it from some different spots too. But if you increase the blend, you increase the demand.
That's right, definitely. John, let's talk about beans. All the rains across the Midwest, I want to ask the same thing. Have they been impacting this year's soybean crop?
Well, if you've got beans in the field and it's raining on them and you're expecting lots more rain, it definitely is scary. But we've had experiences in the past where we didn't lose too much, and we've had the experiences where we have. And so it just depends on each particular variety of bean and a lot of other, and we'll just have to wait and see. Normally, it's hard to get the market very excited about too much rain. All you typically do is delay things. You don't really change the numbers much.
So at this point in time, how much should the market be reacting to that weather?
Well, I think we have. I mean, we've brought the corn and bean market both up into sell signals in this period of time here, and that doesn't happen without having the market react to something, and weather's been one of those factors that we've reacted to. And so I think it's kind of dialed in. I think when we come in on Monday's trade, I think we're going to need to see this rain actually having occurred or in the process or so forth. If it's gone, and the forecast looks better next week, I think they'll take it away on Monday. On Monday.
John, you mentioned there are some ranges with corn and soybeans, and that brings up a good question here that we got sent in this week on social media. I want to squeeze it in here quickly. Nathan in Ironwood, Iowa wants to know, with the big carryouts and big crops, should we expect range-bound trade in corn and soy throughout the winter, and then what are those estimates for ranges?
Well, I think the answer to that is yes. We're going to have to find the price level. Once the crop's put away, that's the first thing. We have to get the crop put away. Once it's put away, we're going to have to find out the price level that it takes to get it back out again. What will farmers want? What will they wait for? And that will really determine how far the price can come up. And we've got another thing we really have to keep in mind here, and that's that we're acting as if we've lost the Chinese business forever. And I want to remind people that we came in on Monday and found out that, surprise, surprise, we had a trade deal done over the weekend. And so the NAFTA is gone, and now we're dealing with a new trade agreement, and we don't know all the details, and they're not all worked out, but there is a trade agreement in place. We could have that same situation happen on any day with China. And And my suggestion is, and this is just my idea only, and I don't know anything about this at all, other than to say that if I were negotiating with President Trump, I would think he would be more willing to give me as much as I'm going to get if I were to do a deal with him, because it will allow him maybe to win what he wants during the midterms. And so I'm of the opinion personally that the likelihood is the Chinese will put together a deal before the midterm election because that's their best time to negotiate. If it looks like the election is going to be the big blue wave that they talked about 2 weeks ago, they'll wait till afterwards. But the colors change. The polls are changing here this week, and so the possibilities are that he will not lose the majority. And if that's the case, China might be better off to make a deal before the election rather than wait until after. And so we'll see. And I'm just suggesting to growers, don't think that we can look out this next year and we can understand it. I can't answer the question because I think that's going to be the biggest key that's coming along, is when we finally get a deal with China.
John, really quick, before we move on here, if we do get a deal in place with China before midterm elections, around midterm elections, what price strategies should producers be looking at to make sure that they can take advantage of those profits? Because I assume the markets are going to rally on news of a China trade deal.
Add $1 to the price.
$1.
Yeah, maybe more, and maybe more. We still have big supplies. I'm not suggesting we have any tight supplies or anything like that. I just think we have a lot of demand that's pending out there in the world, and they may throw the switch.
Okay. John, your quick thoughts on cotton. How has the weather been impacting the cotton market?
The cotton market's been dead sideways at a lower level, at the lowest area, and the surpluses are big enough that we're going to maintain low price levels here until we see some change. And again, the tariff situation is another problem with that.
John, how did NAFTA or USMCA impact the live cattle markets this week?
Well, I'm not, I don't know that it really had a huge impact, but the feeder cattle market, lots of feeders for sale, and they were all higher. Fat cattle market higher. We think the cattle market's up here at a peak. We hedged into the highs this week. If you remember when I was here on the 24th of August.
I'm glad you remember the date.
we just had the swine, or the African swine fever. In fact, it was so new I kept calling it the African swine flu. But that African swine fever turned on the buy signal to a lot of people with a lot of money. We're up $7 a hundredweight in cattle. We're up $15 a hundredweight in hogs since I was on the show that time. And if you recall, we talked about don't sell anything here because we've got world meat protein situation here in flux. Well, that flux caused people to buy a lot for that reason and whatever other reason. But now we're up here at a price level, and we think we need to hedge into this market, both hogs and cattle.
Do you see feeders supported at the 160 level at this point in time?
Yes, feeder cattle are very well supported with these prices on feed.
And do you anticipate further upside potential then for feeders?
I don't think a lot. We have sell signals on feeder cattle too, and so no, we're selling into the market. But again, we had a very strong feeder cattle market in the live cattle market this week, and there's no signs of it being weaker next week.
John, when we look at pigs, how did they get impacted this week by the USMCA deal? Well,
we had a huge move. I mean, in fact, the October hogs were so far behind the cash market that the October Dees moved $3 in one day. So the market has come up for how much of this we can put on the Mexican agreement and how much we can put on other situations. It's hard to know how to balance it. But we had a lot of positive news come into the marketplace this week for the livestock.
John, when we look at the pork market, why is the October-December spread widening so aggressively?
Because the cash market forced the nearby October to come up. The cash market led the futures market up. The December market is still dragging behind because in general the marketplace would like to be negative.
Final question for you. I think before we run out of time here, we've seen a significant uptick in hog weights compared to last week. We're still below where we were year over year. Will weights increase with cheap corn and feed demand?
Well, as long as you have the cash market strong and the futures out just in December is weak, it's awful hard to get people to carry hogs longer because the market's basically saying they're going to get cheaper.
And if you are a pork producer or an end user right now, would you be locking in those feed needs?
If I were, no, we're at the sell signal on the grains. We had buy signals about a month ago or so. We'll have them again. We'll wait.
We'll have them again. John, we're going to continue this discussion in Market Plus. Thank you so much.
Thank you, Delaney.
That wraps up the broadcast portion of Market to Market, but we will keep the conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at iptv.org/MTOM. Check out our Flipboard magazine called Market to Market Reading Material. Our producers drop several stories every day into one convenient location for news impacting rural America. Join us again next week when we'll explore how ranchers in the High Plains are still frustrated after big wins over water and grazing rights. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.